Hi, I'm Evan with Southern Trust Realty. I'm sitting down with Roberto. He is a mortgage broker. And for some people, they may not know the difference between a mortgage broker and a retail banker or the bank at the corner. So, Roberto, can you tell us a little bit about the different types of lenders out there and why that matters to someone looking to purchase a home?
Absolutely. Hi, everybody. This is Roberto Piñeiro with Home Sweet Home Financing. And that's actually a great question. It comes up a lot, Evan, and I'm glad you're asking. I'm what's called a broker. And what a broker is we don't technically work directly for the bank. We're a broker in the sense that we have access to quite a few different banks. And what makes us different from what you mentioned as a retail loan officer, if you ever hear that term retail, is that that loan officer works specifically for that bank. So, for example, I've been doing mortgages since 2005. Back in my day, I used to work for Wells Fargo. Well, as a loan officer for Wells Fargo, I was only able to offer their products to our clients. And in 2023, I decided to leave the retail side of banking. In other words, not working just for one bank and offering that one bank's products, but I decided to open Home Sweet Home Financing, my own broker business. So now I have access to 20 plus banks that I work with, which allows me now to work on behalf of the consumer and offer different types of products that maybe this bank doesn't offer, but now I have 20 other banks and see what they offer, or compete with the different banks to see who's offering you the best terms as a consumer.
So, what do you look for when you're trying to pick the right product or loan for a home buyer?
It's a great question. I like to really understand the client's need, because there's different types of clients and you have different types of products that they may be interested in. For example, I work a lot with first-time home buyers. Well, a first-time home buyer, they may not know, excuse me, um, a first-time home buyer, they're looking at, this is the first time they're purchasing a home. They don't know about the process. So really understanding what they're trying to accomplish and also helping them understand the mortgage process is key versus working for like an investor, right? Who has a portfolio of business and they're familiar already. They've purchased quite a few properties, in the past, but now they're just trying to see which bank is going to offer the best terms for them. So my approach is just really understanding the client, what they're trying to accomplish, how much money they have to buy. Understanding their financial situation now allows me as a professional and as an expert to just help them understand which is the best loan product for them.
So, you mentioned first-time home buyers. So, if somebody was maybe also looking to buy a second home or an investment property, um, are there products out there that are specific to those buyers?
Absolutely. Yeah, there's different types of options. Sometimes people upgrade. They want a newer home or a bigger home. Maybe their circumstances have changed. They don't want to sell the house that they currently have, right? So they may make the home that they're interested in purchasing their primary and then lease out the home that they're in. Others love the home that they're in. They don't want to change, but as you mentioned, they want to buy like an investment property and perhaps either rent it out, lease it out. Then that's an option that's available to them. Or sometimes people want to buy like a lake house or somewhere to go to a certain time of the year. So they buy a second home where it's not their primary, but throughout the year they use it, maybe live in it or stay in it for a couple of months during the cold season, enjoy the nice weather, and then they go back to their primary residence, once they're done using the second home. So, yes, there are quite a few options that we have for our clients.
Kind of going back to the first-time home buyers for just a moment. I know there's a lot of grant programs and assistance to assist those buyers. As a broker, are you able to assist with those as well?
Absolutely. Yeah, and there's quite a few different products that are available for what we call DPA, down payment assistance. Um, it also depends on the county. Sometimes the county where you live at or live in or looking to purchase has some down payment assistance options. But yes, there are quite a few different nonprofits as well who are in that market, and they do offer either free grant money where you don't have to pay it back. It's a true grant, or some down payment assistance programs come in the form of a second lien. And so, if you refinance or sell the house within a certain amount of time, you would have to pay that money back. So there are different options. This is where understanding what these options are can help you make an informed decision as to what type of down payment assistance program you'd like to use.
That's really, really great. I mean, there's just, it sounds like there's a lot of different products out there and a lot of different things. Like, how do you keep up to date and keep your mind fresh and find the right one?
When you do this for some time, you start to get familiar, with certain areas as well as the type of products that are available. But yes, it is a lot to keep up with, Evan. I mean, it's always changing. Each bank has their guidelines, so I'm always keeping up to date. A lot of the banks that I work with, they provide us with like emails and updates on any product changes. So I try to manage it all by keeping it all on a spreadsheet, knowing what bank offers what product. Some banks are a little bit more aggressive with their terms. In other words, they may offer a lower interest rate for a specific product. So, for example, a conventional loan is a type of product, an FHA loan is another type of product, VA is another type of loan product, or USDA is another loan product. There's different products, but a lot of the banks offer the same. Like almost all the banks that I work with do conventional loans, FHA loans, VA loans, but it's just how aggressive do they want that business? And if they really want that business, they'll lower their rates. And so, or they may be a little bit flexible on certain guidelines. Um, it just depends.
You mentioned rates. I gotta address the elephant in the room. I mean, that's the number one thing a lot of buyers really get hung up on and looked at. And I often tell my buyers, like, that's just one sliver of the whole calculation of what you're paying and what your payment's going to be. But it sounds like, and you can help expand upon this, that their rate is going to be different at different banks. And the rate that you see when you Google it or you're watching the nightly news and they say rates are up or rates are down, or even confusion around the Fed changing rates, people think that that is the mortgage rates. I think we'll just share with us a little bit about your insight on rates.
Well, everybody's always so rate conscious, and you're right about that. To answer that, there are a lot of um, things that affect the rate. So, for example, your credit score. Somebody with a higher credit score is going to get better terms as far as a lower interest rate because their credit score is higher. That affects the interest rate. How much money you decide to put down, which a lot of people have the misconception, well, I have to bring 20% to the table in order to purchase a house. That's not true. You don't have to bring 20% down to be able to purchase a home. You can actually purchase a home with as little as 3% down, 3.5% down. If you're a veteran and you've never used your VA benefits, most veterans are entitled to purchase a home with zero down. In other words, there's no down payment requirement for a VA loan if they're entitled to those benefits. So there's different types of misconceptions when it comes to that, but the down payment can also affect the interest rate as well. The type of loan product that we do affects the rate. The type of purchase. Is it a primary home? Is it a second home? Is it an investment property? All of those parameters, they play a part in the interest rate that a client gets. It's not always about the interest rate. Everybody wants the lowest rate. I'm a consumer myself. I also want the lowest rate. But there's so many different parameters that can affect the interest rate. And again, that's where when I do a consultation with my clients, I look at their credit. I look at, well, how much money were you planning on bringing to the as a down payment? What type of product are we doing? Are we doing VA where there's no down payment requirement, perhaps if they qualify, or FHA with a 3.5% down? Understanding what the client is looking for can affect that rate.
Yeah, that
It's
you're
a lot, I know.
yeah, I know. And so, and I think that that's the main thing that I find myself a lot of times reminding, my clients is that, the like I said earlier, the rate is like just one part of the calculation in the purchase of the home, and that the cliche term, date the rate, marry the house, but it's true. Like if you find a property, a home that you can afford, you can buy, waiting on interest rates to go down to buy it is not necessarily the best move. Um, and so when I connect you with one of my clients, what does that process look like, and what would they expect when they first connect with you? And just walk us a little bit through what that process looks like.
Before I answer that, let me answer also, because you had also asked about like the Federal Reserve and the Fed
Oh
fund
yeah.
and those items. And yes, you're correct as far as there's so many different things that affect the rate. Also, the market affects the rate as well. So a lot of people have been hearing recently on the news that the Federal Reserve has been lowering the federal fund rate. That is not mortgage rates. When you hear the term federal fund rate, that does not directly impact mortgage rates. Um, it plays a part overall in the overall economy, but it doesn't directly affect mortgage rates. What affects mortgage rates is the bond market. And so when the bond market does well, mortgage rates also follow and do well. They go lower. But the federal fund rate, all that is it's the rate that banks lend money to each other within a 24-hour period. And that does have an impact on home equity line of credits, mutual accounts, different types of accounts that are affected directly by the federal fund rate, but not so much mortgage rates. So a lot of people do ask that question. They're like, oh, well, I heard that the Federal Reserve lowered the federal fund rate. What are mortgage rates today? Well, for example, last year, when the Federal Reserve met and they actually cut the federal fund rate, mortgage rates actually went up. So
Yeah.
it was the opposite effect, but everybody hears that the federal fund rate was cut and they assume that also mortgage rates go down. Now, it's funny you asked this question because the Federal Reserve is meeting today. They met yesterday and today for the first meeting of 2025. So any moment now, if you turn on the news while we're recording this, you should see Jerome Powell on the news answering questions pretty soon on the economy, if they're going to cut the federal fund rate for 2025, if they're not, and then the reasons behind that. So just real quick, I wanted to just address that issue because
No,
everybody's
I'm glad you went and brought that back up, because it is important, and there is a lot of misconception with how all of that works and what's driving interest rates. And I mean, there's just, like we said, there's a lot of economic factors that go into it, and it's mortgage rates is not the Fed fund rate.
two different things. So yeah. But in regards to like your clients, whenever you're looking to refer a client to me, it's really listening to the client. I can't stress that enough. It's getting to know your client. So if there's a brief introduction, if you do refer a client to me, it's me just getting to know that client. Briefly, quick call. Hey, my name is Roberto with Home Sweet Home Financing. I'm excited for you. Looks like you've made the decision to want to purchase your home and or perhaps refinance, whatever the scenario is. Getting to know the client, understanding if they're a first-time home buyer, if they're a seasoned investor that's looking for a specific loan product, um, understanding that. And then what I encourage the client to do is go to my portal and fill out a brief application. The application is going to ask the client questions about them. For example, their legal name, their date of birth, their social, where they've been living at for the past 2 years, where they work at. Are they self-employed? Or do they work for a company? How are they paid at that company? Is it an hourly rate or is it a salary? All of these questions, believe it or not, are in the application. It sounds like a lot, Evan, but it's really not. It takes probably like no more than 10 minutes to fill out an application through my online portal. But all you're doing is just filling in the blanks and just answering those questions. Once the client submits the application through my portal, then I review it, I pull credit, and then I do a follow-up call with your client. So what we do is we schedule a call to go over the initial loan consultation. And that's what I call it, an initial loan consultation. So seeing it on paper is one thing, but I also dot my I's, cross my T's on that follow-up call to make sure, okay, you're interested in purchasing a home in the 300,000 price point. What I do is I go over credit, income, and their assets to make sure that I could qualify them for that purchase. So we'll go over their credit report together. I'll let them know where their scores are at, credit scores. If there are any concerns on the credit report, then I'll address those concerns with the consumer over the phone. A lot of these calls, I do them by Zoom too, so not just over the phone. I actually have access to Zoom where we have a meeting just like this, so I share my screen with them. For me, transparency is important. So I'm sharing my screen with them and I'm going over their credit with them. Once we're done with credit, then we look at their income. We'll address those questions as far as how they're paid, who they work for, how long have they been working there. And then from there, we'll go over, well, where's the money coming from to purchase the home? Is it coming from a checking savings account, an IRA account, 401k, stocks, or some clients are receiving a gift from a family member to purchase. So we'll go over that. Once we're done with all three, credit, income, and assets, that's it. If everything checks out, then I provide you and the client a copy of what's called a pre-approval letter. And that's where the fun begins, because now the client can actually start, scheduling with you to go out and start shopping for the home that they're looking for.
Yeah, that is the fun part. I know. I tell people all the time I get to do the fun part, and you're the numbers guy behind the scenes.
I always tell the client that I'm like, now the fun begins. I'm sorry I had to ask you these questions, but the bank is going to lend you money to purchase your home. So we just got to make sure that everything checks out as far as income, credit is okay. And believe it or not, all of those parameters, credit, income, and where the money is coming from to help you buy also affect the type of loan that you get. So in that call, I'm also giving my suggestion and saying, listen, I believe, a conventional loan would be a better loan for you, or maybe an FHA loan is a better loan, depending on where the credit scores come in at. They'll get better loan terms going FHA than they would conventional. It just depends, but that's where that call allows me to get to know the client, and then also the client to get to know me as well. So it's like a mutual meeting.
Yeah, and for me and my clients, I request that they speak to you or a lender and get pre-approved prior to us going look at those homes, because we've got to know what you can buy. We got to know what pond we're fishing in. And there's, both sides of that. We could be looking at too much house and you fall in love with something that you can't afford. And then there's we could have afforded more and we sold ourselves short.
Correct. And I like to ask, okay, well, what's the max of your budget? Now, whatever the client decides to buy, that's completely up to them. But I like to work with high numbers as a max budget, because it allows, okay, well, if you find a house, that's maybe at the max of your budget, but can you qualify for it? Because that's really important as a real estate agent. I mean, that's so important to know that you have an approved buyer. You don't want to be driving around 20 houses, like you said, and not knowing if they even qualify for that house. So it's important to get pre-qualified initially, so that way the client knows what their budget is, if they want that monthly payment, what their rate would be, and if they qualify for that much house. And then it puts you at ease knowing that if you are ready to submit an offer and they're serious at buying a house, you're not wasting time trying to get them qualified to put an offer on a home. No, they're already qualified. We love this home. Let's go put an offer on this house. I want this house.
Yeah. Yeah, you mentioned something earlier about the kind of those high numbers, worst case scenario kind of numbers. You know, sometimes too, like what you can afford and maybe what you're comfortable with may not be the same number, right? I'm sure you've seen it, I've seen it, where maybe someone's pre-approved for $500,000 home, but in actuality, when they look at the numbers, and I know that you can help them look at the monthly payments and run different scenarios for different specific homes if they are interested in one. But sometimes, you know, seeing what that monthly payment is going to be from an affordability standpoint, you know, you may be more comfortable at a $400,000 house and what that is going to come out of your bank account every month.
Absolutely. We all want the $1 million, $2 million house, but sometimes we have to see what our budget allows us to get into. So, yeah, it's key. That's all part of the initial loan consultation. It's going over those details with the client. And sometimes reality does sink in, because sometimes, I've seen a few extremes. People think I can't afford a home. And no, they can.
Yeah.
And it's literally just putting a plan in place, seeing what loan options are available to them. For others, it could be a reality check. They really want, like you said, a 500 plus, thousand home, but in reality, that may be pushing it with their budget. Or we may have to put a plan in place and recommend, listen, can you eliminate certain debts that can help us get to this price point? It's all about having that conversation with the client. Some clients are receiving extra money at the end of the year in bonus pay from their employers that can help eliminate some debts. Then they can qualify for the price point that they want to buy. There's just so many things, but this is where understanding what the client's needs are, it's just so crucial, because then it allows me to see if we can make it work and help them out. I'm big on home ownership. I want
Yeah.
you to buy your home. This is why I do what I do. And this kind of goes into our why a little bit. You
Yeah.
had this conversation earlier, like
Yeah.
we do what we do.
Yeah. I mean, the check that you write every single month for your home is the largest portion of most people's household income. And you should, you know, I think there's a something intrinsic inside of me like that is rewarding when I can help someone get that first home that they're looking for. And I've been finding a lot lately that there's people who don't think they can or never will be able to buy a home. In actuality, they are so much closer to buying a home than they even realize. And they just need someone to talk to them, to educate them, to show them that it is possible.
There was a client that just to tag on to that real quick, because you just brought it to my mind. There was a client here in Florida. She was a nurse. So I'm licensed in Florida and licensed in Texas. Okay. So I can do loans in all of the state of Texas, and as well as in Florida. This particular client lived in Florida, and she had already spoken to 3 different banks. All 3 of them told her, no, we can't get you approved. Now, this kind of ties into what we spoke about initially, right, on this recording, that um, when you work for a bank, the bank has their products. They have their what's called their underwriting guidelines. So sometimes they have what's called overlays. That's a term in the mortgage world that a lot of people are not familiar with. So an overlay is we have the investor guidelines, right? All banks have to adhere to that, to the investors guidelines, right? It's all the same for each bank. But an overlay is that bank has chosen to add additional guidelines on top of the investor guidelines, hence the term overlay. So people sometimes may get discouraged because they go to a bank, and because of the bank's overlays, the bank's not going to sit there and tell you, oh, we have these overlays. No, they're just going to qualify you based on their terms. So you as a consumer, you feel rejected. You're like, I can't get approved. I can't buy a house. And that's not true. And that's what happened in the case of this client. She had went to 3 banks and they weren't able to help her. Well, finally, I was able to meet her. I got introduced to her. The realtor partner reached out to me and said, hey, I've got this client that's looking to buy. And I'm like, sure, let's take a look at it. Now, her credit wasn't the best. She was below a 580 on a credit score, but I was still able to help her and get approved. And we closed on her home within 30 days. I think 20 days I closed that loan. It was super quick.
That's
But
great.
I say this because sometimes people may go to a bank, the bank tells them no, and now in your mind, you think that you can't qualify for a house. And that's far from the truth. It's just who you work with and what options they have, that can really help somebody get qualified. So if you're listening to this recording, you find yourself in that scenario where you've gone to a few banks, call me. Let's take a look at it. Let's see if we can help you get approved to purchase your home.
Absolutely. Yeah. I mean, there's no harm in reaching out, even at any point in the process, even if you're just thinking and toying with the idea of browsing homes to buy one. I feel like there's no harm in connecting with someone like yourself to just see where you're at, and if you're not there, what it's going to take to get there, because and having a plan to get you into your home. I mean, I think a lot of times people think they need to do certain things. Oh, I've got to get at least a 680 credit score. Oh, I got to get 20% down. Oh, I got to get this debt paid off. And in actuality, it's maybe not as daunting or scary, or any of those things need to happen. And you may actually be qualified to start now.
Yeah. You know, you're bringing to mind another client in Texas, in the Dallas area. Um, I met her through a realtor, and she wasn't ready at that time. She was not ready, but I put a plan in place for her. A year later, she calls me back. She says, Roberto, I think I'm ready. Everything that you told me to do, I did it. And sure enough, she was ready. I was so happy. And I closed on her new home. She said, everything that you told me to do, I went over it in detail. I took notes on it, and I made sure that I implemented everything. And I had kept in touch with her, but it was actually nice because I had lost touch with her for like the last 3 or 4 months out of everything. Then she calls me out of the blue and she goes, Roberto, I'm ready. And we helped her purchase her first home. So it's all about putting a plan in place, even if the conclusion of that call is, you know what, at the moment you're not ready, you're still going to know what you need to do. I'm going to go over that with you. I'm going to put a plan in place for you, so that way you know you're not just like wondering, well, can I buy a home? No, you have the blueprint and you have the map on what the next steps are. Do your part, and I'll make sure that I do my part.
That's fantastic. Roberto, how could someone get a hold of you if they're looking to connect with you and put that roadmap together?
Well, I know today we live in an era of social. Everybody's social, so I'm
There's
on.
a lot of this on social.
So you have Instagram, TikTok, YouTube, but you also have all my contact information that I'll share here. You can email me, call me, my direct office number, my mobile number. So there's so many different ways that you could get a hold of me. Facebook, I get notifications from clients from everywhere. But I'll make sure to share that information, all my contact information on this call. So that way you can reach out, whichever is the easiest way for you to reach out and give me a shout.
Great. Well, thanks so much for your time and, you know, helping all of, these first-time home buyers and clients and future clients achieve their dream and home ownership and reach their real estate goals.
Rewarding. It really is. But thank you, Evan, for also taking time to sit down with me and go over this in detail. And hopefully this can help, those clients that think that they can't. Let's just take a look at your situation and let's see what we could do to possibly help you out to get you into your new home.
And I know we mentioned a lot of different cities on this, but I'm in the Houston area. So if there's anyone that is looking to buy, sell, or invest in the Houston, Texas area, I'm here to help.
Oh, my guy, Evan, he knows what he's doing. And it's a joy to work with you, Evan. And it's nice to see also your commitment to your clients, your dedication and helping them as well. Find the right home in the area and in the price point that they're looking for. So thank you as well very much for taking the time to sit down with me today and have this conversation.
Thank you so much.
Yeah.
All right. I didn't know how long we wanted to go.
It's your call.